Have you ever seen a company like Reddit or Zomato just pop up on the stock market and wondered, how did that even happen? Well, today we're cracking that exact code. We're talking about the IPO, that huge moment a private company steps out into the public spotlight. Let's dive in.
So let me ask you this. Have you ever kicked yourself thinking, man, if only I could have bought Apple stock back when it was just starting out, or gotten in on Google on day one? That whole idea, that dream of getting in on the ground floor, it's all tied up in this thing called an IPO.
So what is an IPO? It stands for Initial Public Offering, and really, the name says it all. It is the very first time a private company sells its stock, its shares, to literally anyone in the general public. It's this massive turning point where a company goes from private to public. But that makes you wonder, right? Why would a company even do this? I mean, it's a huge, complicated process, so there must be some pretty good reasons. Let's get into that multi-million-dollar question.
Well, it usually boils down to three big things. First, and this is the big one, they need money. A lot of money. To build new factories, hire more people, or just expand like crazy. Another reason is to wipe out their debt. And finally, it's a payday for the people who got in early, the founders and the first investors. It's their chance to finally cash out on that big risk they took years ago.
Okay, so we know why they do it. Now let's talk about how. This isn't something that happens overnight. It's a whole journey a company has to take to get listed on the stock exchange.
And yeah, it is way more complicated than just deciding one morning, hey, let's sell some stock. You can't just slap a for sale sign on the company headquarters. It's a super intense, highly regulated process.
You can kind of break it down into four main stages. First, they hire the big guns, investment bankers. Then comes the paperwork, and I'm talking about a mountain of it called a prospectus, or DRHP, that details literally everything about the business. After that, the executives go on what's called a roadshow, flying around, pitching their company to giant investors. And then finally, based on all that buzz, they land on the magic number, the starting price for one share.
All right, so the price is set, the company's ready to go. Who actually gets to buy these brand new shares? As you're about to see, it's not exactly a free-for-all.
Just look at how this pie is carved up. The biggest slice, by far, goes to what we call institutional investors. Think huge investment funds, banks, the real heavy hitters. Then, the next piece goes to high net worth individuals. And that last smallest slice? Well, that's for us, the retail investors. You and me, sitting at home on our brokerage apps, hoping we get lucky.
Okay, now for the part everybody really cares about. Let's say you beat the odds and actually get shares in an IPO. What do you do? Is it an automatic win, or could it be a trap? This is where the gamble really begins.
You've basically got two main strategies here. The first is playing for listing gains. That's when the stock price pops on the very first day. So if you bought shares for $50 and they start trading at 75, boom, you sell right away and make a quick profit. The other strategy is the long game. You hold on because you actually believe in the company and think it's going to be worth way more in, say, 5 or 10 years.
But, and this is super important, you have got to know the risks. Don't get burned. A lot of these companies are surrounded by massive hype, which means it could be way overvalued. Then there's something called a lock-in period. Insiders can't sell their shares for a while, but when that period ends, they might all rush to sell at once, and the price can totally crash. And remember, because the company was private, there's not a lot of public history to analyze. You're taking a bit of a leap of faith.
So, after all that, what's the big takeaway? How should you think about an IPO when you boil it all down?
Honestly, the best way to think of it is as a company's big coming out party. It's their grand entrance onto the stock exchange. It's the bridge they cross to go from a private startup that only a few people own to a public powerhouse that can be owned by millions. So now that you've got the inside scoop, I'm curious, are there any upcoming IPOs that you're keeping an eye on? Let us know which ones you're watching down in the comments. Thanks for hanging out with me today.